You know what I got to get next? I know you're in the background. You can hear me. I need to get like a little countdown thing. I got to set up a countdown.
Yeah, live in 5, 4, 3.
Exactly, right? Like it's almost needed. I got my first sponsor, so we're off and running.
Congrats. Amazing.
Thank you. All right, let me make sure we are live on X. We are live on Twitch. Twitch stream is live. Looks like X is live as well. Perfect. X is also live. Is YouTube live? YouTube is indeed live. Perfect. Awesome, awesome. As people trickle. What is up, everybody? It's Bryson. We're back with another episode of Vesting, and I'm super excited because we have one of my favorite people in the venture capital space joining us for a special Venture Friday episode. This guy is an absolute legend, and I love his strategy for investing in startups, and I think you're going to love it as well. We got the GOAT, Gabriel Jarrosson, joining us, the YC expert. Uncovering the top 2% of YC startups every fucking batch. Without further ado, let me bring this man to the stage. Gabriel, welcome to Vesting. It's a pleasure to have you on. The last time you were on the stream, it was pre-vesting. It was like the show was, I hadn't done any of this stuff. You were like one of the founding adopters of the show and one of the first people I brought on. So it is a pleasure to have you. How have you been, brother?
Thanks for having me. You're too kind. I'm very excited to be back. Love what you're building with Vesting and very excited to be back. How are you?
I'm good. Starting the year off with a bang. A lot of cool, interesting things happening. A little bit of travel coming up with one of your portcos to be a part of a big announcement. I'm not gonna spill anything. A big announcement coming potentially in February. So excited for that. I'm sure you're already tapped into what I'm talking about, but it's going to be fun. So I'll be out in SF not too long from now, in probably mid-February, but it's been great. Just making a ton of content, having a blast. Like, I think that's been the best part is meeting so many of these founders at the early stage. You know how it is. They all have different personalities and backgrounds and stories. And I just bring them on and I'm like, yo, like, let's just chat. Let's vibe out. So same with you. Excited to have you on and just vibe out.
Yeah, that's what I'm here for. And, we're the three of us, you, me, and YC, probably competing for who's creating the most content. You're far ahead. YC and I are just right behind. But, content is everything. I'm so happy to be here. We're doing live content together. It's just so cool, man.
Yeah, it's crazy. It's like you, me, and YC we all have a content relationship with each other because, like, a lot of what my content has been and a lot of my come up in the startup adventure space has been a byproduct of people either they say one or two things. Yeah, I've seen you reviewing YC startups, or I saw you playing YC Arena, which is like funny because I've had founders that'll come up and be like, yeah, like I saw you like rating the pitches and it was like funny and stuff. And people always ask me like, why don't you do it more? I'm like, look, I don't want to be a comedian. It's great every now and then, but yeah, we both have a very interesting relationship with YC and I love it. And we're going to see each other soon again at Demo Day. But this isn't about me. This isn't about Demo Day. This is about you and getting you on the show. So I got to start it all first and foremost. Like for any of the folks that are new to the stream, you are Gabriel Jarrosson. And sorry that it like completely botched your name. That was completely my fault. There should be an extra S in there. So yes. To start it off, can you just give us the spiel? How did you get into venture capital? How did you do what you currently do? You're a 3-time exited founder. You built 7 startups in general. Like you have a crazy background. Can you give us like the Gabriel J elevator pitch?
Yeah, sure. Well, very happy to be here. I guess what ties everything together is my passion for entrepreneurship. I've just always loved building. I'm a VC today at Lobster Capital, but I still manage this fund like a startup. I want to grow it and have exponential growth and etc. And so at Lobster Capital, we're backing, finding, and investing in the top 2% of every YC batch. We're exclusive to YC. We don't index the batch. We select the top 2%. We're very selective. We believe there's a big discrepancies in YC with some very big outliers. We want to find them and we want to invest in them and, of course, help them. And I got started. I learned how to code at 13.
Yeah.
Just a very typical story here in the Valley, I guess. Built a lot of companies, had so many huge failures, and honestly didn't really know what I was doing, but was very perseverant and, again, just passionate. I just kept at it. And after building so many startups, failures, successes, exits, I thought investing would be a good way to put everything I learned into application and sort of scratch my itch of always wanting to start something new. I was this entrepreneur who had a new idea every month, which is not great. You want to pick something and do it for a few years if you want to succeed. I was doing everything at the same time. I was too young and too sort of crazy. So investing was really interesting there. I started as an angel. Then I did it as a French YouTuber, and I was doing SPVs.
Yeah.
And that's how I got connected with YC first. And then YC did really well. The SPVs did really well. Now I'm in YouTube in English, obviously, but also doing it with an actual fund. Yeah.
I mean, just an overall crazy story, because even watching your like content ascension, the amount of content you put out now versus when we first met, you're like exponentially further along than you were like even 4 or 5 months ago. And
trying to catch up with you, man.
So like, I want to know, because you've been chatting with some interesting founders, some of which I've actually invested in, which is cool. Because like I saw your chat with John over at Juxta, and I was like, that's actually very dope. Yeah. When you look at these founders, right, and because you see the entire batch, and this is like something that's like so prevalent to, your thesis. It's like YC vets, we go in and we vet after YC vets, but we're vetting on various different, indicators. Like, and we've chatted about this before, but for those who have not heard this, like, what do you look at most when you're thinking this is something that could be interesting for Lobster Capital?
Yeah. So, we have a very specific approach, and we don't pretend it's the only one or it's the best one. We think it's a very good one for us and for our investors, and our investors love it. We want to be very, very humble with what we like and what we don't like. That actually doesn't really matter. What matters is what the market likes. So a lot of people have a lot of promises. Oh my God, it's going to be so great. We're going to sell so many. Okay, what have you sold today? So the number one thing we over-index on is strong early traction, because if you have strong early traction, it means you've built something, you know how to sell it, and the market wants it and wants more and more and more of it. And so again, there's some things that we don't really understand or necessarily like, but the market likes it, and so they're having very strong traction. On the opposite side, a lot of startups we love, I would be a user, but then they don't have a lot of revenue, and I'm thinking, well, maybe I'm the only one liking this. It could be a niche. So, and by the way, early stage investing has a lot to do with the team, and so companies that make it to YC have to be great teams, but companies that reach 1, 2, 3 million in just a couple of months, sometimes, you have to be an exceptional team. So the traction also tells you about the team.
Do you think that there is, do you think that having the approach that it all starts and ends with traction, does that make it easier for you to like siphon through what is considered noise? Because a lot of times, especially with social media, you'll see a company that like, they have a ton of noise, social media presence, they're having the viral videos, and like, then you might look at the traction when you're like doing due diligence on that company. It's like, it's almost like fool's gold. Like, does your strategy help you kind of break through that noise very easily?
Absolutely. And by the way, if the company is very popular online, it better have strong traction. Otherwise, if it's just a lot of views for nothing, like that's a big problem.
Yeah.
What if you and I have all this visibility online, and you obviously have much more than me, but and it translates to nothing? What, you're doing all of this for no reason? That's not what it is. You're signing sponsors on your show, like you're saying. And
shout out to Warp.
Exactly. And you have all those amazing projects coming on, right? So huge social presence that does not translate into any revenue, that's kind of a red flag, actually. It should translate into something.
Yeah. And I feel like, so my experience investing in YC has been fun to this point. I've invested in some companies that have already pivoted, some that are just like trekking on and crushing it. And I look back at kind of my experience to this point investing in YC, and I'm like, you know what, this Gabriel guy, he might actually be onto something. Because, like, for example, when I look at companies like you did Sunflower in the last batch, absolutely crushing it. Like,
yep.
But they were crushing it pre-YC, and they had revenue and they had traction. They had all these things that you talk about. And it's almost like we as investors have gotten to the point where sometimes we think we're smarter than what the market is.
Yeah. It has to do with ego. Look, as soon as you've made money once on one deal, you start to think, and it happened to me too. It happens to everyone. Oh, I'm so smart. I'm going to be able to find the next gem. And then you have to sort of let all of this aside, let go of it, and be like, you know what? It probably just was luck. I'm being fooled by randomness. And so and by the way, this is not a catch-all. There's always going to be a company that has zero traction at demo day, and they pivot later, and then they become a unicorn. And I'm going to probably miss this one, right? But on average, when you're a fund manager, you're building a portfolio. If all of your companies are already crushing it and growing fast, on average, you should have better results overall at the end than just picking them randomly. That makes a lot of sense, right?
No, I think it for sure does make sense. It's also the thing of like, you don't rue missing a company, right? Like, it's just like that's just a part of the game. Like for example, Kalshi. Like, Kalshi was probably, I don't know, I wasn't around when when they were going through the batch, but like my guesstimation is like their revenue was probably in the shitter initially. And then they find that inflection point, and then you look up and it's like, oh man, this is like absolutely crushing it. But like, that's not a no-brainer in today in like YC batches. Like in a lot of these batches, like today, a company like that would probably struggle to finish their round as they end the batch. Like, they'd be one of the last people closing in a sense.
No, absolutely. And, so I'm just checking. Yeah, they went through in 2019, and in 2019, prediction markets were not a thing. It was this sort of weird fringe thing that no one really cares about. Pretty much like Coinbase. When Coinbase went through YC, no one at all cared about crypto. It was this weird, geek thing on a small part of the internet. So those you might miss. And honestly, but again, think of the guy who tells you, yes, in 2019, I knew exactly why prediction markets were going to go big and, influence the election of the president. Like, either this guy is a genius, he shouldn't be a VC, he should be, I don't know, solving whatever humanity's problems, or he's probably lying to you. And if you're honest, no one in 2019, no one, even A16Z or anyone else, was able to predict how big it was going to come. So again, take sort of the ego out of it. And remember, you can be very lucky. I just did a video about lowercase capital, Chris Sacca's fund, best performing fund ever. And he did 250x he returned on his fund. Like, that's insane.
What?
Because in the same fund, he had Uber, Twitter.
Oh my God.
Whatever. This, like, it's insane.
Yeah.
But after this fund, he retired because he recognizes, like, this is luck. You're never going to be able to do that again. He's a genius, and he was at the right place at the right time, but he was also very lucky. And that's why he closed his fund. Well, he's also a billionaire, so he doesn't care anymore. But because you can't repeat that at scale. So people underestimate the part of luck in success. And that's why I want to invest in YC. YC is sort of a luck accelerator, a luck whatever, because you have the smartest people, they're selected, they're all in touch with each other, they're all in the same place. So it's going to favor luck of all of those companies.
I really love what you said there, where it's like ego. Like, I mean, imagine doing a 200, like, I don't know how big his fund was, but like at 250x on a fund, you're getting so much in carry, like on that 20%, that like, when you sit there and you look at it and compare that to, like, for example, A16Z, their recent fund, I saw a tweet out about it, about like their previous funds. If you look at it across all of their funds, the bigger the fund they've raised, the less capital they've actually returned.
Yeah.
Yeah.
I mean, it's normal. It gets harder and harder to return capital as big as your fund grows. Because my first fund was 12 million. To do a 10x fund, you need $100 million in exit value.
Yeah.
It's like a single deal could return $100 million. When you have a 15 billion fund, which is the latest fund from A16Z, you need to return at least 50, maybe 100 billion to return something that matters to investors. So, but this is also sort of misleading because it's only the multiple.
Yeah.
But then if you look at the amount of the size, then you see that they're still returning a boatload of money. Because when you make 4x on what is it on 600 million?
Yeah, I mean, that's still very impressive.
That's still several billions of money that you give back to the investor. So it's good. But it's always, that's why there's a lot of people investing in what's called emerging managers or small funds or even micro funds.
Yeah.
Because the multiple has the potential to be bigger, but there's also, it's like seed investing, but there's also a lot of funds that don't return anything.
Yeah, because it's like, and I want your opinion on this. Do you believe that the business of being an early fund manager is like 10x harder than being a founder? Because if you strike out as a founder, people love you and they're more willing to back you the next time because you have the experience, and odds show as a former founder, your odds of like building a unicorn go up actually after your first failure. But as a fund manager, if you give me $10 million and I don't return anything, you're going to be, you're not giving me another chance per se.
Yeah, for sure. I mean, I still believe being a founder is harder. Being a VC, in a sense, we have it good. We don't need to build anything. We just give money to people and we sit back and sort of wait to collect the checks. At least that's how a lot of people do it. Like I was saying earlier, I see myself as still an entrepreneur and a founder. So on top of raising and investing, I'm doing a lot more stuff, including content, etc.
Yeah.
Being a founder has to be harder. That being said, you can be a founder your entire life because you fail and you try again, and people will think you're going up the experience curve. Yes, if you're raising even 10 million, even 2 million probably, and you return zero, that's it. Your career is over. Is over. Sorry, you can just go and do something else. Like no one's gonna. The thing is, usually with funds is you're raising fund 2 usually before you have the results of fund 1. And so what I've been told is fund 3 is actually one of the hardest to raise because by fund 3 you should have results from fund 1, and so people want to see actual numbers. With fund 2 you can sort of be like, hey, fund 1 is going well for now, and so let's keep going. At fund 3 people are going to expect results, but still there's only, I believe, 50% that graduate from fund 1 to fund 2. Only half are able to raise a second fund. From 2 to 3, I don't know, but it's got to be steep as well. So it's a thing where a lot of people sort of try it, and they don't. It's not guaranteed they're going to have a job in 5 or 10 years doing this again.
That's insane. Like it's almost like being a VC is such a glorified job when you're winning, but we barely ever hear about those who are losing.
Well, it's the same for founders, right? You always hear about the big fundraise and the big thing, but so many founders struggling, are not able to raise. We live in the YC world where almost everyone raises, but so many founders, even in SF, not able to raise, 200K. So, and we don't hear about them either.
That's a very good point. And speaking of founders, we got to go through some founders ourselves because you and I both love YC, and there are a ton of companies that have now gone live on the YC page. I want to just get your thoughts. Like, what are some companies that you think are interesting? What are some early winners, some clear standouts that you're seeing on your end? And I know maybe you don't want to give up a little bit too much alpha because you might be investing in some of these, which makes sense. But if you had to look across the board, what are some companies that like you're like, hey, I love what these guys are doing. I love the idea. I love the approach. There's something here.
Okay, I'm pulling up my notes. You win.
Oh my God, you're giving us the notes? Yeah. Wow.
All right, I'll give you my favorites. Okay, no, there's one that I thought was quite interesting. I think I think probably a lot of people talked about them. Is Pocket, the physical note taker? You've seen them, right? Yeah.
Yeah, I made a video on these guys, and the video went like pretty viral. They're interesting.
Yeah. So, Pocket is interesting. There's this company that has the drone that's charging itself
Oh yeah.
on the line. Did you see that? Yeah, you did.
Yeah, that one's crazy.
What is it?
Oh man, what is the name of that?
It's like a self-charging drone. It's Voltaire.
Voltaire, yeah.
Yeah. So basically for listeners, the drone will fly, and when it's out of battery, it will literally land on the line and charge itself from the line, and that's it. And so the idea is it can inspect the that you see the video here. It's gonna just literally land itself. That's so crazy, man.
That's nuts.
That's nuts. And did you see the one that's gonna do underwater breathing?
No, what's that?
Man, it's the most James Bond thing. Like type in underwater breathing. Oh, it's right there. Dive in. You had it. Yeah, dive in.
Are you serious?
Yeah, it's like the Star
Tankless
Wars
diving gear.
Yeah.
Breath autonomy at sea. There's no way.
Yeah, well, for right now it looks very clunky and big. Yeah, but
it's like a jetpack. That's kind of cool though.
Yeah, it is.
It's like a little
and there's
pack.
a video. I don't know if you can find it. There's a video of the founder testing it in the water. Go on the X at the bottom. You have the X account of the thing. The video. It's so cool because it's the ugliest video ever. And I'm not saying this as a bad thing. It's so scrappy. It looks like it's been shot 20 years ago. And I was watching it and I'm thinking, when this actually works in 2, 3, 4 years, we can be like, look, this is where we started. This is sort of the most humble beginning. Like, look at this. It looks so bad.
Was this like his first version?
Yeah, exactly. That's his launch video, but it works. Then he goes underwater and he breathes, and that's fine, right? So
I mean,
it's just crazy.
So
I've heard.
So is the scuba? Is this like less than normal scuba gear still?
Oh, I would say, I guess, sort of equivalent. I mean, this one looks slightly smaller, but the ones you see on the website are probably similar to scuba gear.
Wow.
From what I guessed. Yeah. But yeah,
so how does he breathe out? He just breathes out through his, like the same tube he's sucking air in from?
I don't know. I guess.
Oh yeah. Interesting.
It seems Paul Graham, I believe it was him who was saying, you can be James Bond, you can do whatever, like do crazy stuff. And like this plus the Hotel on the Moon. I know he's been on your show.
Yeah.
Like this is crazy stuff YC, but it's good, right? Sometimes remember Philip from Philip Johnston from what's it called? Star Cloud. Everyone said this is nuts. Why would you put data centers in space? But then, after a while, Google came out and said we're going to do it. Musk came out and said we're going to do it, and people are like, this is not crazy at all. So this is sort of the same idea. It looks crazy until it works, and then just everyone starts using it.
Well, what's crazy also is those are the types of companies. Yeah, they have like a crazy failure rate, but I mean, I even look at StarCloud, right? I love the founder, Philip. I mean, if he makes any major breakthroughs, companies like that, they just teleport to like multi-billion-dollar valuations, like so quickly to where it's like, damn, it'll look obvious at that point. But in the early days, it's like, oh man, you're doing what? Yeah, fuck no, this doesn't work. There's no way.
Exactly. And he was mocked. He was ridiculed. And it might be like it very much could be one of the biggest wins of YC ever. Yeah. So,
I mean, now that Elon's talking about it, I've seen this one. I haven't gone through this one yet, but this one is super interesting. This is like
this one is crazy.
Like the robots for cows or something.
Yeah, it's drones to muster cattle. So instead of going out with the dog with whatever. To muster the cattle back to the ranch, you just do it with a bunch of drones.
So the drones just kind of fly around and like basically scare the cattle into going back where they need to go.
I believe, I don't know if the drone is like barking duck sounds or something, but yeah, the drone is just pushing them in the right direction. Isn't that crazy?
So you don't even have to go out there at all.
That's it. It's autonomous. You just stay, you just do some other stuff. I love this one. 410K cattle on wait list.
Wow.
So I tweeted, instead of make something people want, is make something cows want.
This is actually super interesting. I mean, this is the traction that you always talk about. Like you got to have like 2 active Australian pilot farms. That's really cool.
the wait list is a great element of traction for sure. So this YC batch, it's early. We haven't seen all the companies. They haven't all been announced, but we have the typical, AI whatever, which is great. I'm not saying anything against it, but we have those crazy things that we just mentioned.
Yeah,
and I'm guessing we're gonna see a few more, and it's really cool. It's really cool.
I like that they're trying to balance more like different styles of companies, because it's great to like see the same stuff, but it's also cool to see stuff that might fail. It's like, you could fail, but YC gets so many returns from companies now. Like the last couple of years have had to have been incredible for them in terms of overall returns.
Up until just a few months ago, like really second half of 25, the website said 600 billion of enterprise value created. 600 billion.
That's
then
so
they
insane.
updated it to 800 billion, but with the new website, which I'm sure we'll get to talk about as well, now it says 1.3 trillion. So it went from 600 to 1.3. It more than doubled.
Wow.
In less than a year.
That's so crazy. Like that's so many wins.
You know what? I'll make a prediction here. I think it will be at 10 trillion in the next 5 years.
You know what? Like on paper, it seems like a big number until you realize it's not impossible considering how much AI and how much robotics is taking over and how much new value creation is happening as a byproduct of that.
Exactly. So I'm predicting 5 years. It took them 20 years to get to 1 trillion. I'm predicting it goes from 1 to 10 in 5 years. I believe it's going to happen. And, everyone talks about the 6.5% unicorn rate of YC. I believe this is going to go up as well.
Man, I think the model is just so good. You even see it with there's so many other accelerators that are trying to copy and get a piece of that model. So
yeah,
I agree with you. I don't see how they don't continue to just compounding, because they might miss a founder every now and then, or a founder might not go. But most of the time, every new founder who's trying to make something brilliant the first time around, they end up at YC.
Yeah, if they're good enough.
That's true. All right.
What about you? What are your favorites so far?
Probably. So, I know I did one before the batch. I'll shameless plug. I did
You'll plug them again.
Yes, I'm going to keep plugging them because I put money in them and they're great.
That's good.
Where are these guys? So I did Core Layer. They're on-call AI engineers. I actually got into them well before the batch, so I didn't expect. They wanted to get into YC. I'd never set expectations on teams. I'm like, if you get in, great. If not, but they got in. But in terms of companies that I've seen that I have not invested in that I think are quite interesting, I really liked Voltaire. That was one of my favorite ones. I also think Voxel Energy could be interesting. I don't know how easy it'll be to make energy independent off the grid data centers, but I think there is something there. It's like a technical issue. It's well, if you can solve this technical thing, then we have something really cool to talk about. But if not, we'll see what happens. And then probably where's the founder I chatted with the other day? Opalite Health. Opalite Health reminds me of the whisper flow of the healthcare industry, where they're basically just creating low latency software for translating conversations between patients and doctors. So you could be speaking French in San Francisco in a hospital, and it's translating as you're talking in voice into English. Yeah. So I think that, and one of their founders is an actual doctor, and she said that's really been helping them selling directly into these hospitals. So I really liked our conversation there. And then personal, just founder that I thought was great. Mantis Biotech. The founder at Mantis Biotech seemed very cracked. So those are probably some of my standouts so far. But the goal is
what about Pax Historia? Haven't you conquered a few countries on your spare time?
I have enjoyed Pax Historia. I think that they're going to do incredibly well just off the fact that YC doesn't do many games, but a game that's kind of intersection of AI, but you have to spend tokens as you're playing. The things I want to see them do is I want to see them bring on a designer that can make the game sexy, because right now it's not sexy, and games need to be sexy. It's cool that the model works. We know it works, but it's It needs to be sexy. I'm not sure if it's something that like becomes $1 billion outcome. So like I kind of have my reservations there, but I really like the team, and I think that the product is actually pretty sticky.
Yeah, I can tell you from some proprietary data that we see at Lobster Capital, they seem to be, in terms of website, by far the most popular of the batch so far.
Really? Like web traffic wise?
Yes.
What do you think revenue numbers wise? Do you think they're doing any revenue? I mean, they have to be, right?
I mean they're like more than 10 times the number two. So I actually think they're sort of flying under the radar. But yes, I think they're making very decent revenue. So, we'll see.
Incredible.
That's we have to be insiders. We have to know very early on. So this is just my guess. But I guess they're making decent revenue. They're probably number one in the batch in terms of revenue right now.
Well, I kind of figured after I played it the first time, I was like, this shit is actually ridiculously addicting for no reason. And when I tell you I sat here for 3 hours, fucking dude, I took over Cuba. I was just going around and taking over stuff. And there was at one point I took over. No. Russia was doing something in the Middle East. And I told the game to use alien UFO technology that the United States had acquired to basically bomb Russia's intervention in the Middle East. And it destroyed the entire intervention. And I offered Russia a peace treaty by offering them a $35 gas station gift card.
Amazing.
Yeah, like you could do. No, they got completely pissed off, and they were like mad, but they didn't want to fight me because they didn't know how to fight against like the UFO technology that I had described to the AI agent that allowed the game to basically do whatever I wanted it to do. So yeah, it was just pure comedy.
This plus whisper flow, you're having so much fun, right?
Yes. You literally just read me like a book. So I see two worlds. I see a world where not only does the game do very well, but I think eventually they could create almost like a physical board, a physical version of the game, and have people around the table that are playing almost on a physical board, but you have a small device that you just press that like can hear people talk about their decisions and their moves. And then the AI would basically spit out what happens. So if you and I are at a table, you're playing as France and I'm playing as Egypt, and you say, I want to invade Egypt right now. And it goes around the board, then the AI would respond, you invaded Egypt and lost half of your soldiers. And like maybe it updates things on the game where you could take off certain soldiers. Like I think there's a world where they could turn Pax Historia from not only just a online game, but into a physical product that people would play.
It's almost like Dungeons and Dragons, but the game master is the AI. You don't need a game master.
Exactly. It becomes like,
and it doesn't have to be. It doesn't have to be a physical product. It could be like, hey, put your phone at the middle of the table, and the phone is now the game master, and you just play. And Dungeons and Dragons, I've never played, but it's you don't need any equipment. I think you need a dice, but that's it. It's just sort of imagination and storytelling and stuff like that.
And you're absolutely right. That might actually be a better model. Just make it an app on a phone. Every player that wants to play can sit around the table. I mean, considering you can use as many countries as possible, and the AI is the game master, which means it has all-knowing memory of what everyone says and does. You could get super intricate, especially by making it to where, like, you have to have a subscription to play. Like it could get very interesting. I get my mind just racing.
It could be not only World War II, it could be anything, could be starting today and be China versus the US. It could be actual Dungeons and Dragons, but it could be anything. It could be Lord of the Rings. It could be like, okay, now you're whatever, Frodo or something. It could literally, it's just stories, right? So yeah, the potential is here for sure.
Gosh, you're making me want to message them and be like, hey, can I get a 150K allocation to do my first SPV?
Let's do it.
Like legitimately.
Let's do it now. Like, okay, let's get the allocation. No, I'm kidding. Okay, we're not allowed to do that.
We're not. I can't.
Live.
You think I could? I'm gonna message him and see now. You got me like thinking, but I feel like I could. I feel like this would be a fun thing to SPV.
Yeah,
like a game that people could play. Be like, look, we're making the greatest AI game you've never played, the greatest grand strategy game.
And you can play live on Twitch every week, once a week. Let's have a new game, play with your community, and just do it together.
That's what I'm saying. You telling me that wouldn't be fun?
That'd be crazy. It'd be great.
Oh
You
my
could even have a
gosh.
game of YC. Like, hey, you're Paul Graham in 2005. Yeah, man.
Oh my God, you're right. You could get
Yeah.
like super crazy with it.
You could do anything. We should send this to them and see what they come up with.
We are going to send them this clip and be like, look, we just gave you guys some more PMF. Like, go run with it, figure it out. Like, let us know what you come back with. But like, if you take any of these concepts, you have to give Gabriel and I an insane amount of allocation.
You'll get your SPV. I'll make sure of it.
Yes. All right. I got to take you to my favorite segment because they sponsor the stream and they're a YC company. So it's a win-win. And this is the Warp Speed segment. Actually, I think I jumped one. Let me go back and all the way through and fix this because I don't like the way that looks. I'm jumping. I broke it again. Forgive me.
You're there. Oh no, you broke it again. You're right.
I broke
Oh,
it.
God.
All right, it's fixed now. All right, now I can start it over. We have made it to the Warp Speed segment. I'm going to ask you rapid fire questions powered by Warp. They do payroll, compliance, and HR that runs itself with AI. They're a former YC company. So this is the Warp Speed segment. The fastest company in payroll meets the fastest game show in venture. So I'm going to hit you with 5 rapid fire questions. You have about 1 minute and 30 seconds to answer them. Let me know when you're ready.
I'm ready.
All right. Question number 1. What's the dumbest way you've seen a YC startup burn money?
Oh my God. What's the dumbest thing? Oh man, I've seen it all. I mean, I probably would say I'm guessing big amounts of money, right? So I would say billboards in San Francisco. I mean, you know, we're in 2026. You have ads with tracking and attribution, and you just put a random billboard. I mean, if you're, you know, a big, like whatever, if you're Brex, you know, I know they'll come up later, sure. But if you're a YC company with 500K, just don't do it.
All right. Next question. What's the fastest way a YC founder can make you lose interest from an investing standpoint?
Yeah. We don't want to talk to our customers.
Have you had have you had someone say that, like, or they're
Well,
like
not
not
like
talking to
that.
enough customers?
Yeah, people who are building in their cave and, you know, oh, we'll launch later. We're not ready to launch. Like, yeah. Especially if you're in YC, you should really know better.
What is one brutal truth about venture capital that startup founders aren't ready to hear?
You're not that special.
Oh my gosh.
Well,
Damn,
how
that was
many-
deep. I'm not gonna lie. Your aura, you had like crazy aura when you said that. That was kind of fire.
Well, yeah. So many. I mean, it's true for me as well, right? Investors are not that special either, I guess.
Yeah.
So many founders doing so many cool things. We're lucky to live in this world, but so your company is just one of many. So,
All right. What separates YC hype from real YC traction? I already know your answer to this, but I'd love to hear it again.
well, yeah, real problem solving, real users using your product. I had a YC founder tell me recently something that was really, I loved it so much. Getting early traction, you just need to show the customer you understand the problem. But getting the customer to stay for more than a year, you need to actually deliver value. So that's the difference between the hype and the real value bringing.
All right. Last question. What's more dangerous, founder ego or founder fear?
Founder fear, for sure. Ego has it's not great, but it also has a good thing, right? Ego is just, you want to create a massive company and just eat the world. Fear will paralyze you. That's the worst of all.
And you have made it through the Warp Speed segment in flying colors. Actually, that's some really good answers. The one where you said not that special, I'm not gonna lie, that was like a cold line. Like that was
Sorry.
like No, that in a good way. That was like max aura type shit. But just as you said, we have to talk about it just because, I mean, it is like the news of the last 24 hours. Brex sells at a $5.1 billion. They get a $5.1 billion exit to Capital One. I'm excited to ask you about this because as a venture capitalist, you know that you look at numbers, analyze numbers more than anybody when it comes to like, what do returns look like? And when we look at on the surface, right, don't get me wrong. I think a $5 billion exit it's incredible. I've never built a $5 billion company. I won't take anything away from someone who has. It is an incredible exit. And whatever he does, once he's done with Capital One, if he decides he wants to go back and build another company, like, I don't think he'll run into any problems getting funding, making a 5 times unicorn. But when you look at the previous round, they raised at that $12 billion valuation. And I know they've come out, some people have come out and said, oh, well, you know, people are fine. People are making money, yada, yada, early stage investors. YC was in early, so I know they made money. But do you see this as truly a win, a loss? Is it kind of just somewhere in the middle? Like, what are your thoughts?
Yeah, I mean, this one is very interesting because it's probably both at the same time. Overall, I would say 80%. It's a huge win for YC. YC is probably making around 200 million out of this. So you know,
that's not bad.
It's not too bad. For a 100K check, it's so what is it? 100K check is 2,000x.
Wow.
So, you know, yeah, it's not too bad. For any investor at demo day, it would probably be 100 to 150 or 200x from what I calculated. So and you know, it's over $1 billion. The founders are instant billionaires. It's you know, it's great. It's a $1 billion deal. It's awesome. Now, of course, what gets a lot of people's heads scratching their heads is the down round and the down value.
Yeah, can you break that down?
Sorry?
I was just going to say, can you break it down for people who don't understand, like, what happens if you've raised at a higher valuation and then have to go back and sell for cheaper?
Yeah, absolutely. Yeah, no, that you're right. We should break it down. So they raised at 12 billion and now they sell at 5. And so, you know, let's say you put in $1 million at that $12 billion valuation. If they go tomorrow and sell at exactly 12 billion, you just get $1 million back. You haven't made any money. You haven't lost any money. You're hoping they're going to double that from 12 to 24 billion. And then your 1 million investment doubles as well and becomes a 2 million exit. It works the other way around as well. And so your 12 billion investment at, call it 6, because it's 5.1, but you know, to just make the math even, 6 would be half of the 12. Then your 1 million, you'd only get 500K back. So you've lost half of your money. That's really not what you want when you're investing in a startup, especially in a late stage like this that's already making a lot of revenue, growing fast. You're usually thinking there's low risk, and that's one of the reasons why I don't like late stage secondaries, because you have the illiquidity. You can get out whenever you want, opposite to the stock market, but you're not sure to have upside. You could go up or down, just like the stock market. So if it can go up or down, you might as well have a liquid investment and invest in Chime that's already listed, then invest in Brex that's not listed, and you know, might exit after 1 year, but you might be stuck for 5 or 10 years. You just don't know. And that's why I think seed investing is much better, because you are stuck with seed investing, but you do have maximum upside. Investing in late stage like this is downside of illiquidity, but also not a lot of upside gains anyway. So where I'm surprised, and where a lot of people are surprised, is as an investor, when I'm coming in a company at whatever valuation, even if it's a YC demo day company at 20 million, there's an implicit contract between the founder and the investor to say, hey, now you valued my company at 20 million, or you valued my Brex at 12 billion. And so I'm going to do my best to either sell at a higher price, or if I'm not able to get a higher price, I'm just going to keep working to grow the business until it comes true. And so if I invest at 20 million and the founder tells me, hey, I'm going to sell at 5 million, I'm saying, hey, you duped me, right? If I give you a valuation of 20 million, it's for you to grow that valuation. So that's already sort of a weird thing. If you've raised at 12, you have a responsibility to keep growing the company above 12. Now, we don't know all the things. There's warrants and preemptive exits. It could be possible that the latest round said, hey, we'll get 1x our money back no matter the valuation. That exists as well.
Yeah.
So we have to go into the details of the round, which I'm not aware of. And so if that's the case, maybe it explains everything. And the other thing was the ARR multiple, which is less than 10 times ARR. It's 7 times ARR. And so it's also a sort of low multiple, which gets people wondering what's going on here.
Yeah.
Is it because it's not AI? Is it because it's not differentiated? I mean, banking is pretty commoditized now, and you're competing with a lot of other startups. You're competing with Mercury, with Ramp, with all of them. And how are they really different? Honestly, the real answer is they're not that different. And so when it's a undifferentiated product, you usually have is it a word? Groupment? Anyway, whatever. I'm looking for the word.
Yeah.
Big ones acquire small ones.
Yeah.
And it gets consolidated.
Yeah,
That's
consolidation. Yeah.
Consolidation, is that a thing? Anyway, that's where I got stuck. So that's what it usually happens. And so yeah, I mean, but those are the sort of negative. But I mean, come on, we're being tough on them. It's a $5 billion exit.
Yeah, it's still pretty. I mean, if you were early, like, you did incredibly well. So at the end of the day, regardless of if they, I mean, I'm sure every investor would have loved to see them go up from 12 to 24 and at least double before selling. But it's also a thing of, sometimes you got to know when to get out. Sometimes you got to know when you've taken a company far enough on your own. And when you see competitors moving at a pace, and maybe, I think they had a situation where was it like one of the co-founders left, or maybe it wasn't one of the co-founders, but at some point you do have to just say, okay, well, we've taken this as far as we can go. Like, let's just.
Yeah. And it's been 9 years. They went through YC in 2017. So, maybe, the founders want to just do something else with their lives. They devoted 9 years. You also get a paycheck of, $1 billion plus per founder. Like, that's tough to turn down. Like,
you think they got $1 billion each?
Well, how many founders do we have at Brex?
Well, they only had two founders.
2 founders, right? So they might own 30% of the company.
Wow. Yeah, you're right. So if you add in like the stock options plus cash, like, they probably did really, really well.
Yeah. So, maybe it's 800 million before tax or something. It's close to $1 billion. So the real question is, what is it going to change for you, the founder, to go from 800 million to 1.5, 2, 3, 4 billion? Like, does it really matter in your life? Like, 800 billion, you're set. You're done. It's almost impossible to spend it all. You could buy all you could buy the biggest condo in Manhattan for 100 million, and you still have 700 million.
Yeah, that's true. Like, you kind of can't, unless you're just like a complete idiot, you can't ruin that. And for most founders, like, you don't really have that many. There's not a lot of things you really care about buying, right? Like, if you had $1 billion right now, I'm like, okay, maybe a nice car, nice house, but I would still probably just do what I'm doing, just take more vacations, and like, have less stress of knowing, like, okay, I never have to worry about money again.
I mean, I've made the math, and I've thought about this many, many times and read on it, and there's really not much difference between 100 million and $1 billion. Mm-hmm. And it's actually very interesting. There's so many people in the world who are sort of stuck at 500, 600, 700, 800 million. Yeah. And they're so unhappy because they want to be billionaires, and they're missing, one or two handies, 100 million, 200 million, which is not crazy. That easy to create, right? And they're just frustrated their entire life because, oh my God, I wish I could be a billionaire, which is just sort of a representation. It means nothing, because in your daily life, from 100 million to $1 billion, it changes nothing. Now, from 1 million to 10, lots of changes. From 10 to 100, some changes as well. Yeah. But from 100 to, at 100 million, you can own as many real estate as you want, luxury places. You can own your own jet at 100 million. Like, what else do you need, literally, right? So anyway, we digress. But so maybe they're done and they have so much money on the table, it's hard to say no to that cash. but also we judge the transaction now. What if in 2026 the market turns completely and there's no exits and the valuations go down drastically? It could look very smart after the fact. That's what happened when everyone sold at the people who did sell in 2021, 2022, peak of the bubble. At the time, it looked weird, and then in 23, 24, it looked genius. So we don't know where the world is headed. The cash is in their bank account now. That's good.
I think you probably had the most accurate take on it, like legitimately from all perspective. It's like, yeah, I mean, 9 years grinding in one of the tough, I would argue finance is like one of the toughest categories. Building like the neo banking credit, like that is such a tough category to do it for 9 years.
For YC founders, so like you have zero right to mistake. Like it has to be flawless all the time.
And think about it. You go from demo day, you go from getting accepted into YC to going on a 9-year sprint of your life. And you don't get no breaks, no stop, increase valuation. And then you get there and you realize like, okay, well, to your point, we've done all we can. This is a crazy exit. Like, I guess it gets to a point where it's like, yeah, like what more do you need in life? Like, I mean, right now, right? If let's say things went well with vesting and it got to a point where it's like, I'm not the only one doing these streams, and I don't know, fucking Meta or X or someone was like, or some large media conglomerate was like, hey, Bryce, here's $50 million. You bootstrap vesting all on your own. You're going to walk away with 30 mil of it because you have X amount of equity. Even at 30 mil, I'm like, okay, like that's fine. I'm a content creator. Like I'll just keep making content with now 30 million more in the bank than I had yesterday.
Exactly.
Yeah.
And imagine for them, it's probably in somewhere around 800 million or billion or something. So,
I mean,
it's tough to turn down.
Nothing you can't do. And to never have to get on another investor call again in your life.
Yeah.
That's kind of a win.
And also, I mean, yeah, like you said, 9 years, you might want to do something else. I don't know them personally, the founders, but maybe, banking is not the only thing they aspire to. And I'm not saying like banking is not bad at all, but maybe they also want to build, whatever rockets or drones or whatever, right? Life is long. You can do plenty different stuff.
This is so true. Now, we went on a tangent. It was so much fun. I love convos like that because we're just kind of like, we're talking about news, but we're also like just theorizing around life and like founder motivations and things of that sort. But we got to talk about this because the grandfather in the room, Y Combinator, has finally decided to give us a new website. And I want your reaction on what we're seeing here. A new font, right? A new font pops in.
Yeah.
So much cleaner.
Wait. Go back. This is what they obsessed about, this sentence. And it used to be YC gives founder an unfair edge or an extraordinary edge or something. It was really around pick us, choose us because we're going to give you an unfair advantage. Now it's, hey, if you're a builder, we're going to turn you into a formidable founders. And so what's a formidable founder? And you have the Paul Graham quote, but of course you're invited to scroll and they're going to give you what formidable founders are. It's the likes of Chesky, Altman, Collison, etc. So it's very inspirational. I love the before and after pictures, all of them.
Right.
And there's so many big names. I think it works. It's the same purpose as before. The purpose is to inspire founders to choose them. Remember, they have competition now. People are thinking, hey, should I do whatever, speedrun, HF0, blah, blah, blah.
Yeah.
YC wants to remain the top dog, and they are, and they probably will stay there, but they just need good websites to convince founders all the time, every single time.
What's like so interesting about what you said was the idea that their old kind of phrase and their new phrase, even though they might be like the goal is the same, you go from talking about one thing to creating a phrase that's more transformational. And people care about transformations. No one's applying to YC to get into YC to be the same person when they get out of YC. Exactly. People want the fame, they want the status, they want the ability to say, I built something great. I'm in great company with other great builders, and I'm in a space where I can create what the future of the world should look like. So everyone's a builder, but not everyone is a formidable founder. But to getting into YC and going through that transformational process, you go from builder to formidable founder. And to your point, going from there, you just get a full story, man. This is sick.
You're right. It's more powerful than the other one because it's more of a storytelling. And, a human brain is wired for stories. We just love stories. It's the best form of content. And it used to be, hey, come in, we'll give you weapons. We'll give you, a sword and a rifle, and you'll have better equipment. And now it's like, come in and you'll be a hero. Whatever the equipment, but you'll be a hero.
It's like you're going on the quest of your life, as if you were playing like RuneScape or Oblivion, one of those games, and you're starting off and you have like, level 1 swordsmanship. But by the end of the quest, you're going to be at like level 80, level 90, right? Like seeing, these guys started here and then they got they built a $107 billion company, right? Like that's cool. Like that's something where you're like, damn, I want to be like them. I want to be next up. So I think they did a good job with this website. Like for me, it's like a 10 of 10. And it does show more of the transformational process that was missing from the previous site.
And it's very visual as well. They purposefully chose pictures that on the left side really look bad. And that's on purpose. Like, look at those guys who look like nothing. And it's like, I wouldn't give them 2 cents. And then look at those guys on the right ringing the NASDAQ bell or, giving a talk on stage or whatever. So
it's like you go from being a loser, like a written off loser to you're a winner. You are now glorified in the eyes of Startup Hall of Fame. You belong amongst the great founders that have ever existed on this planet.
I think you said it perfectly. It's become from a loser to a winner.
Yeah.
I think that's what they want to say. And so everyone is like, I haven't IPO'd. I guess I'm that loser as well, but I could be the hero.
I mean, like look at the duality of this picture. Like over here, you said the quality's not great. The Kalshi logo looks like shit. T-shirts are a little bit big. I'm not gonna lie, they also don't look that cool. Like the aura here is not all there. And then you get to this picture and it's like, damn, bro has the beige fit on. There's tons of aura. Like they're just radiating.
Yeah, and she's the youngest self-made female billionaire. And this should be on the website, by the way. It's missing. If they're listening, just add it here. Yeah,
that should 100% be there.
The aura is insane. I agree. There's this famous Bezos, 2 pictures, like Bezos in 1997 and then Bezos in 2016.
Yeah,
and this is I'm sure you've seen it before, and this is exactly what they did, and it works so well. We're visual animals. We want to see things. That's exactly what it does. So yeah. Honestly, really good. What I think they should put more accent is the 1.3 trillion that you see here. They should have maybe a timeline of like, hey, last year it was only 600. And this is just a regular black thing, exactly like Twitch, Replit, blah, blah, blah. Like they should emphasize on this more. But, the first part, 10 on 10.
Yeah, I agree with that. Love the new website, YC. All of these clips will end up on X and other platforms. So take some of the advice.
Yeah.
Go ahead.
Did you scroll down and do you see the partners? Because they also got old pictures. Yeah. Look at this.
Yeah, this is crazy.
Yeah, this is really cool. By the way, the videos are awesome.
Oh my God.
Did you see this? Yeah, this one was my favorite part.
They even show the founders. They even show the partners when they look like losers.
Exactly. Look at Jared. Look at that. It's crazy.
That's so cool.
All the old pictures.
This is so cool.
Yeah. This is exactly, Aaron is really cool because it's like, hey, just a dude hacking on his computer. Tom, same thing. Like, oh, this is me right now. I'm just hacking on my computer.
Yeah, it's like I was in college just hacking around.
Exactly.
Wow. I'm not gonna lie. Right? This might be the best. It might be the best VC site in the game. Like what they did here, I think just showing the transformation it's insane. It's incredible.
Yeah. It's really cool. Some aged better than others, but that's, I won't say which.
I will reserve my opinion as well.
No,
Oh
yeah,
my
it's
gosh.
a great website. Yeah, it's
All
awesome.
right. All right. Well, we're sticking with the YC Jazz because I have to put you through the gauntlet to finish things off. You got to go 3 rounds in the YC arena and predict whether or not a founder got into YC based on their pitch.
Okay, let's do it.
I think this is going to be great to do with you too, because like you analyze all these founders. So I'm excited for this. All right. We're jumping in.
I haven't played before. I know the website really well, but I haven't played. So it's my first time playing.
Oh my goodness. Okay. So basically it's accept or reject. You can stop me at any time. When you feel like you know whether or not they got in at any point in time, you can say stop and I will pause it. And then you can let me know if they got in or not.
And the video is 1 minute, right?
I think it's whatever video they put into so it should be about a minute. All right.
Cool.
Let's get going. Let's see what you got.
Hi YC, we're the co-founders of Fit AI. My name is Chris and I'm a computer engineering student at Cambridge and at Bank of America Quant.
I'm Rahan, I'm a Goldman Sachs engineer and textiles alum.
Okay,
Hi,
stop.
I'm Alex.
They're in the same room. It's a great name, and they're Cambridge plus Goldman Sachs. I think they got in.
Oh my god!
Yeah.
You guessed that in like 8 seconds.
Well, yeah, like you said, I know YC really well. Yeah.
Damn, you're cracked. All right, number 2. Let's see what we got.
Hi, my name is Kevin Fear. I am a co-founder, CEO, and CTO of Delta Robotics.
Hi, I'm Christopher Holmer. I'm the Chief Medical Officer and co-founder of Delta Robotics.
In 2015, we began a journey of going from customer to customer, business to business, asking one simple question. If you could automate anything, what would it be? And the replies we got back gave us a repeating problem that we set out to change.
And so unlike our competitors who have tried to solve it and failed through engineering, we've decided to solve it this way. If you want a robot to move like a human, it's got to work like one, which means we solved it through biomechanics.
I was hesitating. I think it's not a great video because it takes a long time for them to actually come to the point. They're stalling. We started in 2015 and blah blah blah. So the video is not great, but I think they probably got in. They look serious and legit.
You think so? Okay.
I mean, I haven't heard the whole video, right? So again, the video is not very good, but I'm guessing the product seems legit. They talk to a lot of customers. They talk about a way better solution than all of the competitors. So with the information that I have, right? I haven't seen the end of the video, but
all right, then let's see. We're going.
You don't think so, right? You think they got rejected, right?
I think they got rejected.
Okay.
Let's see. Oh, they did not get in. I honestly, the reason why I think they got rejected is because the sound of the video was shit. They had everything, but like it was just like all in my ear. I was like, I'm like falling asleep listening to this. So maybe the YC partners did as well.
That's possible. All right, I need to get better then.
All right, last one. Let's see. Let's see if you can end on a good note.
Hi,
I know them. I know them very well. They got in.
Damn. Bro knows the whole batch. I got to give you another one. I got to give you one you don't know. All right, this is the last one.
Give me another one.
Hi, I'm Bryce, CEO and co-founder of Zamo.
My name is Danny, CTO. And I'm Santiago, CPO.
Zamo is a drag and drop design tool for D2C marketers to bring interactive widgets into their emails that they send to their customers.
Direct-to-consumer brands love to engage with their customers through emails by sending abandoned carts, reviews, and polls. And they see a pretty good ROI, but the response rates are moderate at best.
Using our tool, brands can embed these complex widgets directly using in their current workflow, making it super simple.
Yeah,
to
they got in.
conversions.
I've seen companies like this in YC.
Damn, you were cracked. I'm not gonna lie, you were really.
I got one wrong that you predicted, so I feel bad. Anyway, I'll play again with you next time I come on.
No, brother, this is great. I got to get you back on a regular cadence, and we can keep talking through the badge, talking through the cool happenings of the startup space. But I truly do appreciate you coming on. It was probably one of my favorite shows, just because like we're already friends and it's easy to talk to you, and it like everything just rolled like a regular conversation.
Thank you so much. I'm very happy to be a regular. Bring me on anytime you want, and congrats. I watch all the episodes when I'm not here.
My
thank
God.
you so much.
Thank you, bro.
Yeah,
Have a good weekend.
You too. All right. Bye,
See
everyone.
ya.
Thanks for watching.
Chad, he was great, right? He is so awesome, man. Gabriel is an absolute beast to have on the stream. I appreciate you coming through, Gabriel, as well. Like, seriously, it was fun. We got to do more of these. And ultimately, it was honestly, I think this was like some of the best viewership we've actually had on the stream, too. We had like almost 20 people live just on Twitch. I don't know who was on YouTube or who watched it on X, but really solid stream. I am going to sign off. Next week, we will have open pitch. I have my designer redesigning some of the layout so we can get a third face cam on here. So when we do bring back Gabriel and other cool VCs, we'll be able to like have people pitch to us live. So I'm going to catch you guys. Have a great